So they call up their Merrill Lynch guy and they're like, okay, buy me ARK B, buy me the BlackRock ETF. I need some exposure. And price is popping. Since the ETFs have been launched now, the demand for Bitcoin is something like 12 times higher than the daily emission of Bitcoin, right? So you're having a wall of demand meet a cliff of supply, right? So there's no supply. You can have a supply shock and a demand shock at the same time. So that's why the price is going to go bonkers on the upside. That's why I have this $220,000 price target, because once this thing gets rolling now, once it gets to a new all-time high, every single chart of every single analyst on every single Bloomberg machine flashes a huge buy. You know, then this money starts to roll in, and it's never been easier to buy Bitcoin. Remember, up until these ETFs, to buy Bitcoin was relatively difficult for the average retail buyer, but now it's as easy as buying any other stock. They can go to their Schwab, they can go to Merrill Lynch, anybody like that. And they can buy into a Bitcoin ETF. So it's never been easier, and the interest has never been higher. The fiat money world's never looked worse.
Today, we hear from Bitcoin advocate Max Keiser, who provides insights into Bitcoin, the cryptocurrency market, and discusses BlackRock's recent foray into cryptocurrency as just the beginning of a larger trend. Keiser expresses concerns over BlackRock's influence as an institutional investor, suggesting it may not bode well for the crypto market. He anticipates a significant turn of events in 2024, emphasizing the SEC's mistake in approving the BlackRock Bitcoin ETF. Keiser paints a picture of impending economic upheaval, driven by the relentless printing of fiat money, leading entire economies towards disaster. Despite this gloomy outlook, Keiser remains bullish on Bitcoin, noting its recent surge in price to over $7,400. A $6,000 increase in just the past month. Highlighting the global collapse of fiat currency systems and the rapid depreciation of the dollar, Keiser asserts that Bitcoin will emerge as a true form of currency, immune to inflation and government manipulation. He delves into his Bitcoin price predictions and discusses why BlackRock's strategies may catch the crypto market off guard. Stay tuned for Keiser's latest interview, where he elaborates on these topics and provides further insights into the future of Bitcoin and the cryptocurrency landscape.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
If you were to understand that the financialization of everything has gotten to this point, then you would understand that you can effectively orchestrate a rug pull on the whole house of cards. People who are feeling like they're broke, they're going to get a lot broker because the purchasing power of that money is continuing to fall. All activists have a common cause and a common enemy. It started with Occupy Wall Street. Occupy Wall Street was an interesting protest because it went after the banks on Wall Street. And that was the first time, to my knowledge, where activists were looking more at the root cause of the issues that they were taking exception with. You know, if we can cut off the funding, then that would be an effective campaign. And that's true. But in the story of Wall Street and the money printers, of course, they can just print an endless amount of money. And so it's impossible to really wage an effective campaign. But in the case of Bitcoin, when you're effectively orchestrating a rug pull on the system, because you are defunding the central banks by putting capital into Bitcoin, so that capital ends up going into this unconfiscatable perfect money Bitcoin, and the folks that are in the business of printing all that money eventually just melt down. They're melting down anyway, but this would accelerate the meltdown, which I think you need to do to right the ship, to get to a point where there's strong fundamental values upon which you can build a society. But right now, we don't have that base to build a society on because it's all being printed into oblivion. Anybody who's access to a printer will print an infinite amount. And so you have a dysfunctional society. And that's happening all over the world. So everyone around the world, every conflict has a common enemy, and that is the central banking cartel. And we all have a common solution, and that is Bitcoin. So we're all working on the same fight at this point. I guess I call it the global insurrection against banker occupation. So we're all living under banker occupation, and the global insurrection is Bitcoin. I want to be a more successful investment banker. I mean, I'm gonna have to get into a higher level of committing massive fraud, or I have to know more about how the legal system works so I can get the loopholes for the clients who are paying me the big bucks. So it's an inward soul crushing experience to succeed in the fiat money world. With Bitcoin, it's the opposite. The more you learn, the better you feel about yourself, and the better you feel about the prospects for others. It's a much more hopeful feeling that you get. So Bitcoin is a short squeeze on the global Ponzi scheme, effectively. We live in a global Ponzi scheme. All banks are Ponzi schemes, right? Fractional reserve banking, which is a term that's pretty commonly understood, right? The bank lends out more than they have on their books, right? And the justification for this is that, well, it's an acceptable risk because we're stimulating growth in the economy. But the fact is that they're exposed, because if there's a run on the bank, then the bank closes. And we've seen that throughout history. This happens from time to time.
And might be happening again soon.
Could be happening. They created the FDIC, Federal Deposit Insurance Corporation, after a crash of 29, and also SIPC and other facilities, government guaranteed to backstop the system. The Federal Reserve Bank is meant to be a backstop to the system. It's supposed to be used in extremis. It's supposed to be there to be a barrier against essentially bank runs. That's one of the primary roles of the central bank. But under Alan Greenspan, starting in the 1980s, you have the concept of the activist central bank, who is not there to be the lender of last resort, but the speculator of first order. Like, nobody is speculating harder than the Fed. The Fed's balance sheet is more leveraged than any corporate balance sheet. This leverage, like, if you did an actual accounting of what's held by the Fed, their loan to ratio is probably in the many thousands of percentage points, whereas the highest leveraged corporation in America might be, at most, I don't know. I mean, I'm guessing, but it's nowhere near what the Fed is. The global economy right now is 300% debt to GDP, right? So the GDP of planet Earth is roughly 100 trillion, and the global debt's 300 trillion. So we're living in a 300%, debt to GDP on planet Earth. Is the highest it's ever been. That's number one. But these central banks, nobody's more leveraged than the central banks themselves, because they always come back to the same thing. We're just going to print more money. And they always do. So now in the US, they've printed what, $34 trillion? They're printing, and they no longer report the debt ceiling. The debt ceiling has been removed. That's no longer an item that you see reported. That politically, there's nobody saying, like, we have to address the debt ceiling this week because we hit the debt ceiling. We have to raise the debt ceiling. They just said a few months ago that that's being removed. There is no debt ceiling. Just like they just removed also the reporting of M3, which was a reporting of the money supply. They do M2 now, but M3 got too scary. So they don't do M3 anymore. They do M2. I'm sure they'll take away M2. So the indebtedness of the bank is astronomical. And so when you buy Bitcoin, you're doing a rug pull on the central banks, essentially, because they still need, at the base layer of their Ponzi scheme, something. So the central banks are so leveraged to this thing. So Bitcoin is a rug pull on the global central banking system that is, historically speaking, at no greater point of vulnerability ever in its history. It's never been more vulnerable than right now. It's never less well capitalized than right now. I mean, right. You can go to the games that are being played. They don't just, like, for example, Jay Powell just doesn't call up Jamie Dimon and send him $1 trillion, right? That's not how it works. But what they do is they let Jamie borrow an infinite amount of money from the Fed at 2%. And allow him to lend it back to the Fed at 3% on the same day. That's a known operation with some fancy name. So they can't write the check to Jamie Dimon, but they put it under the machinations of a scheme like this that I just described. And they'll say that this is necessary for whatever reasons. But there's no, it's the same as just writing Jamie a check. And it's just outright corruption and fraud.
The Bank of Japan, historically pivotal in global currency dynamics, teeters on the verge of default, threatening to trigger a worldwide economic downturn. Max Keiser warns of an impending economic catastrophe fueled by collapsing fiat money systems, widespread inflation, and the specter of bank failures. He suggests that a transition to a Bitcoin standard may be imminent as the world confronts this looming crisis. Keiser criticizes the hollow promises of the Federal Reserve and central banks, attributing them to excessive money printing and a proliferation of ill-advised investments. With the recent surge in inflation, he dismisses the likelihood of a return to the status quo, asserting that the economy has spiraled out of control, with the U.S. facing an escalating debt crisis. Presenting two grim scenarios, hyperinflation or a deflationary depression, Keiser warns of a deteriorating quality of life. He laments the absence of viable solutions, indicating the severity of the crisis. Notably, Keiser observes a shift in political discourse towards Bitcoin as a potential remedy, signaling a move towards a Bitcoin-centric financial framework. Share your thoughts on Max Keiser's latest interview and his Bitcoin predictions for 2024 in the comments below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.